All right, let's talk the broader markets, right? Broader markets right now with Bill Nygren. He is a partner, portfolio manager, and U.S. Chief Investment Officer of Harris Oakmark Funds. Bill, I've been trying to read through your comments on this, and it feels to me like you're a little nervous about where things stand at this point overall when it comes to the markets.
Well, I think, Becky, we're certainly not in the camp of saying things are wildly overvalued. But there's a lot of investor behavior that's somewhat reminiscent of prior peaks, especially like the dot-com bubble, where there's a new language that everyone's learned with AI, and people think because they've learned the language, they've got expertise on investing in the area. There's kind of a lack of fear of risk. Easy money has been made. I like to say, like, if you watch somebody bet on red in a casino, playing roulette, and you see them win, it's obvious they could have lost just as easily. But when they buy a stock at 300 that trades at 600 6 weeks later, it's less obvious that that could have gone the wrong way for them. Having said that, the companies that are involved in the AI trade are bigger than the dot-com ones, the dot-com companies. They aren't reliant on the markets for funding the way the dot-com bubble was. So it's not like we're ringing alarm bells there. We can't find opportunities in that area that we think will help our clients meet their financial goals.
Do you worry about the indexes as a result and what might happen to the major averages?
Well, our concern about the indexes is how different they've become than what people remember them being. The S&P used to be this broadly diversified index, representative of the whole U.S. economy. And one of the reasons it was such a low-risk area to invest in was because it was kind of a hedge against all the expenses in your life. If gas prices went up, you at least owned 6% in the oil and gas industry. Nobody needs a 40% bet on technology to hedge their life risks. So it's like this large bet has been layered on top of.
Although you can argue that technology is basically infused in everything in every industry at this point.
No doubt that's true. But in terms of consumer budget or saving for retirement, saving for college, it's a different area. It's not saying it's overvalued. It's just saying it's not so directly tied. And then people who think about the Russell Value Index, I mean, you don't think of that as an index that Amazon, Apple, and Microsoft are the biggest positions in. It has completely changed from what it was a decade ago. And what we invest in at Harris Oakmark, the stocks that are quite low PEs generally relative to where the rest of the market is, just isn't represented much anymore in investor portfolios.
It's harder to find stocks that are reflective of some of those things you just laid out. You like financials, some software, some healthcare. Why don't you talk us through where?
Sure. First, I'd push back a little bit. I think it's actually quite easy today to find a diversified portfolio selling at low teens multiples. It's harder in the technology equipment area, but other than that, a lot of the market trades at those prices. And
are you talking about the software companies that have all gotten hit because of the concerns about software as a service being taken over by AI?
Exactly. And we own some of those companies. We own a company like Accenture or Salesforce. But I think investors need to remember that not as much has to go right for them when a company like Accenture is trading at a single-digit PE on expected earnings. You look across the financials, most of the banks and insurance companies are either single-digit PE or very low teens, returning a lot of capital to shareholders. I joke we own a company called Corebridge, and I always want to talk to people about it. And even our clients don't want to hear why they own it. They want to know why we don't own certain AI names. That's also reminiscent of how things were 25 plus years ago in the dot-com market. Nobody wanted to hear the positives of the names that were in our portfolio. They just wanted us to talk about the areas we'd chosen not to invest in.
Yeah. Bill, it's a nuanced perspective, and we appreciate your time. I hope you come back and talk with us more about it soon.
Thanks for having me.
Thank you.